All right, good morning, traders and visitors. Today is open house for the BYOB Trading Room. Thank you for being here. Thank you for the attendance today. Thank you to all my paying subscribers. I don't take that for granted. I try to provide actionable, profitable content every single day. Thank you to everybody out there in podcast land, digital land, cyber land. Thank you so much for subscribing to my content, following my content, liking my content. Special shout out to Bob Jordan, John Jordan, Kathy Sarah Roasted for sharing my content. And thank you, everybody, for the very kind words left on my content. Appreciate that. Love that. Hey, good morning, Julie. Good morning, Fahad. All right, let's drill down. Let's take a look at what's going on in the market from Friday. All right, so we'll start off. Hey, September 8th. So good morning, traders. It's September 8th, 2025. It's open house. Good morning, visitors and traders. Welcome to the BYOB Trading Room. If this is your first time, thank you for being here. My SPY pivot this morning is 646.60. Above it, I'm a bull. Below it, I'm a bear. SPY, GLD, gold, diamond down. All right, that's the Dow Jones Industrial. And FNGU made made new all-time highs on Friday. IWM made a new 5-month rally high. QQQ made a higher high and a higher low, closing over a bullish trap over the 17 EMA. SPY closed with a 2-hour uptrend and a 10-minute uptrend. Silver made a higher high and a higher low, closing over a bullish trap over the 17. USO, now in a daily downtrend, made a lower high and a lower low, closing under a bearish trap under the 17. UNG made an inside day, closing inside the bullish trap over the 17 EMA. US dollar index still in a downtrend, closed near 97.71 area. SPY max pain for today is 646. Those are for the SPY options that expired today. And a put to call ratio of 1.3 puts to each call that expires today at 4:15. The main event this week is going to be CPI data release at 8:30 on Thursday. Traders would be wise to evaluate their positions and determine whether they should be hedged prior to the release of the CPI data. All right. Let's take a look over here. We got some bulls and we got some bears. Okay, under the bulls, all of these ticker securities are in uptrends over the 17 EMA. If they have a little star next to them, that means they're probably building out a launch pad from which to launch higher. Okay, all of these are the bears, and if they have a little star next to them, they are building out a little platform, all right, a floor from which to drop lower, okay? So there's the bears. These are all in downtrends under the 17 EMA, and these are all in uptrends over the 17 EMA on the daily chart, okay? These are bulls and bears. Now, I create a list of bulls and bears every day, and the reason I do that is because some people like to be delta neutral. And what it means to be delta neutral is you've got equal amount of dollar value assigned to a bullish securities in the market, and an equal amount assigned to the bearish securities in the market. And that way, when price goes up, these benefit. When price goes down, these benefit. Kind of evens things out. That way, the portfolio doesn't get walloped too hard when we have bad CPI data releases or something like that. Okay, or bad event where something terrible happens, you get a sharp pullback. These would benefit. These would not. Okay, so something that kind of equals out the portfolio, keeps that teeter-totter from hitting the ground on either side. Kind of keeps the scales balanced. All right, so that's what it means to be hedged, just to have equal amounts of not liquidity, of market participation on each side, whether some on the short side and some on the long side. Okay, so that's why I keep a list of bulls and bears. All right, let's take a look at the market this morning. All right, so what do we have? We've got, hey, this is bullish. This is consolidation over prior consolidation. This is the SPY. Okay, so let's map this out here. Okay, so we can benefit from it. So we got a little square right here. This is our, okay, I actually did. That's not going to work on this page. All right, hold on just a second here. It was working a little bit earlier. Hold on. And we'll knock this off. I like my drawing tools because my drawing tools help illustrate what I'm trying to say. And my drawing tools work on screen 2, but they're not working on screen 1, which is the one I'm displaying to help illustrate what I want to say. See, there it goes now. Now it's working. Okay, so trash that out. Okay, let's go back to SPY. Okay, so we're back to SPY. Let's get the squares out, or the rectangles. Okay, you can see we've got consolidation. See that brick where price kind of moves like in a straight line right through here. Okay, see how price moves in a straight line above prior consolidation. Okay, that is a bullish environment right there. Notice this consolidation is above this consolidation from Friday market. So the pre-market from today is above Friday's price action. That's a bullish environment whenever I see that. Okay, so and then on top of all of that, okay, we had a nice 10-minute downtrend, okay, pulling back to the base, all right. Notice we gapped up to about, let's see what we got here. We gapped up to about 652, and made a hard fall back into the base right here, right onto support. Okay, so if we look at this, all right, what do we got? Look at this on the hourly candle. Okay, you've got one big candle with what? No follow through. Right? You see that? One big candle, no follow through. Well, then that's not an igniting candle if it has no follow through. An igniting candle ignites a move further. Notice the next 1, 2, 3, 4, 5, 6 candles don't make any attempt to get back down to this low. Actually, we've got quite the opposite going. You've got price action consolidating over prior consolidation. Okay, so that is a bullish environment right there. Okay, so what I'm looking at today is for a possible move to the upside. It's going to be a birthday trade. Kind of got it illustrated right here, and a little slide. Here it is. Okay, birthday trade strategy. Price ignites off the base. Okay, so let's go back. Ignites off the base. Well, we're here at the base, and you can see price igniting up here, and it stops, and then it pulls back to the base. Okay, so price ignites off of the base, all right, then falls back down sharply to the base. Okay, I would call that a big sharp drop. Okay, if we look at this on the 15-minute, that's a slam down. And what you get is a red rubber school ball bounce, okay, off of the base. This would be the support, where price goes back up and sometimes twice as high. So whatever this was, I would expect it up to about 655 late today, or maybe even open up tomorrow morning. We'll see, all right? But that is the birthday trade. Notice there's nothing on the left because this is the all-time high that was made. So there's no price action to the left to say, oh, it hit a target and therefore it doesn't need to bounce back up twice as high, okay? So price action slams down and like a red rubber school ball bounces up twice as high over the student's head. All right, so we're looking for this to come up to 655 sometime late today, probably near the end of the day. If not then, maybe tomorrow. We'll see. Now, in order for that to happen, we're going to need a 10-minute uptrend, and it's probably going to have to be over VWAP. All right, so when that manifests, we will prepare ourselves for a target, one target, the final target being 655. We'll see what happens. There will be many targets along the way, but 655 will be the ultimate target later today. We'll see what happens, okay? Price went up, slams back down to the base, and now we're looking for it to bounce all the way back up to 655. Okay, so that's what we're looking for today in SPY. We've already got consolidation over consolidation. Maybe this pulls back, checks the evening low, okay, the post-market low down here, and hopefully we get a bounce either off of the trend line through here. Let's pick up a trend line. Okay, maybe through a trend line right through here. Maybe it bounces off the trend line, or maybe off of this support area made here in the post market. We'll see what happens, okay? So there's SPY on the 15-minute. We're looking for a pullback and then a J hook to the upside. We'll see what happens, okay? Let's take that out of the way. Let's go take a look at SPY on the daily chart, okay? You can see new all-time high for SPY, all right? All-time high, so it doesn't get any better than that other than if it closes at the high of the day at the end of the day, which it did not, okay? But still new all-time high, still in an uptrend, nothing's broken, the markets are still bullish, all right? On the 2-hour chart, 2-hour chart is still in an uptrend right here. If I go to this chart right here, put it on 2-hour, you can see the 3 is still up on top of the 8 EMA. So we still have a 2-hour uptrend coming into the close yesterday, all right? On the 10-minute chart, okay, on the 10-minute chart, we have a 10-minute uptrend coming into the close. So what I'm looking for is a continuation of that 10-minute uptrend. So I would look for, I'm going to be looking for a green candle, all right? Green candle, I don't want a doji, I don't want any spinning tops, all right? I don't want a candle with a whole lot of wick, more wick right here, like that, with more wick than body and tail. Okay, I want something that shows me bulls are in control of the time frame and they have the ball and they're ready to score a push for a first down. All right, so that's the kind of candle I'm looking for. So a red candle's not going to work because that shows me bearish control, unless of course it's just a red little top and the bulls, created a huge tail in it. Okay, but for the most part, red candles not going to work for me. All right, I'm not going to be interested in the red candles unless of course they've got a huge tail attached to them, showing me bullish control. All right, because I don't want any bearish control ones. So you see this? This is all wick up top of the body. Okay, that's showing me bears controlled most of the price action in there. Look at that. About 80% of it, all right, was erased by the bears. Okay, so that's kind of not my candle. The one next to it, that is my candle. The one following it, not quite, but again, you can see the bulls came in right here and then they lost it right there. Okay, so there's SPY. Looking for nice green candle to buy into today on the 10-minute chart, preferably up over VWAP. We'll see what happens. Again, I'm looking for 10-minute continuation of the 10-minute uptrend that we left off with on Friday. Now, my favorite trade, everybody in here knows it, okay? My favorite trade is 10-minute uptrend over VWAP that's inside of a 2-hour uptrend. We have that, okay? Okay, we had that right there, okay? So I'm looking for that We got a 2-hour uptrend that's inside that 2-hour uptrend, and that 2-hour uptrend's inside of a daily uptrend, and that daily uptrend is also inside of a weekly uptrend that also happens to be inside of a monthly uptrend. Okay, that's my favorite setup. Not to say that 10-minute uptrends are not my favorite setup. I'm just saying are not my setups. Okay, they are, except that my favorite is the 10-minute uptrend that's inside of all of those bigger time frames. Okay, I like that because I got all of the bigger time frames supporting my little 10-minute uptrend over VWAP. That's why I like it, okay? Because I have everything that's bigger than the 10 minutes supporting it to help move it further or keep it going longer, all right? Either in time or in distance. Either way, that's what I'm looking for, okay? Is that 10-minute uptrend inside of all of those bigger time frames that are also in uptrends. That those bigger time frames are going to support price from falling or push price higher, okay? That's what I'm looking for today, okay? So we'll see what happens at the beginning of a new week. We'll see what happens, okay? No guarantees, but we'll watch the market. So far, like in the pre-market, I'm saying this is looking good when you see consolidation over prior consolidation. That's always a bullish environment. And the fact that when they can move up and hold the higher ground, okay, that's a show of strength. Okay, just think about planking for 3 hours straight. Okay, all right, for those of you that exercise and know what planking is, or holding a chin up, you know, for 3 hours straight. That takes a lot of strength to do that. Okay, so when you see your security or your ETF, your ETN, okay, move up and hold that higher ground for that length of time, they're showing you strength against the bears in this location. Okay, that's what I like. That's important to me. Okay, that means now I'm going to be looking for that 10-minute uptrend over VWAP. Okay, I'll be looking for that to manifest somewhere in this area between this low right here and that high right there. I will be looking for that 10-minute uptrend to manifest, and I will be highly interested in trading it, okay, because it's in the 2-hour uptrend, all right, and inside the daily uptrend, the weekly and the monthly, okay? So there's SPY, okay, on the daily chart, again, okay, new all-time high, okay, so that's bullish. It's up there in quadrant 4. This separated into quadrants. I got 1, 2, 3, 4. Okay, 3 and 4 are over the 50-yard line or the midfield. Okay, half court. Okay, 1 and 2 are below it. Okay, so above it would be kind of bullish. Below it would be kind of bearish. Okay, this is the midfield or half court. We're bullish because we're up there at the top of quadrant 4. That's bullish. Okay, haven't made any lower lows, so we haven't made any destruction. Okay, if we make lower lows, that will create a downtrend. Right now, we're consolidating up here at the top of quadrant 4. That is bullish. They're holding the higher ground. Again, they've been planking here since August. Okay, so that's 4 or 5 weeks of just consolidating up there at the top of quadrant 4. That is a bullish environment. It's not. Look, traders, you're gonna your success is going to be correlated directly to 2 different things: your education, okay, and your discipline. 2 things right there. Are you disciplined enough to follow your plan? Are you educated enough to read the market candlesticks? Okay, when you see them perform a certain maneuver or action where they're holding the higher ground, understand that that is strength. Okay, consolidation over prior consolidation is a bullish environment. So it's what I'm teaching you is your your success as a day trader or any trader, okay, is going to be directly correlated to two things. It's always the discipline to follow your plan, because whenever you don't follow your plan, you're going off track. And when you go off track, then you tend not to be moving forward, all right? You're kind of moving sideways, kind of diagonal, sometimes backwards, all right? So be disciplined to follow your plan. And number two, be educated in your candlesticks, because this is what we use. Price action tells all, okay? You can read the fundamentals and you can see that, I don't know, some rating agency gave this a bullish rating, all right? And it doesn't mean crap unless price is actually moving up, all right? So price action rules everything, okay? You want to see uptrends. Now you see all the green dots, that's the 17 EMA, all right? That shows me price is moving in an upward direction. Okay, see, price continually moves in an upward direction, continually makes, here's a low, a higher low, a higher low, a higher low, a higher low, okay? And with the higher lows comes what? Well, the bulls get inspired to make a higher high, okay? They may be successful, but most of the time they're going to try, okay? They might not make it, but most of the time you'll see an effort on the bulls. If price can stop and make a higher low, you'll see the bulls be inspired to oftentimes run up and test the prior high or go past it. All right? That's what we're looking for. Okay, so SPY consolidating up here. Okay, up there in over 530 or 635 up to 650. All right, and you can see on the weekly chart, okay, see all the green dots. The 3 is on top of the 8, okay, and the 8 is the white line right here. And you've got the candles on the 3, okay, and the 3 is over the 8, okay, and all 3 of them are over a rising 17, okay, that is bullish. Okay, I don't see any signs of exhaustion. This would be igniting. I don't see any exhaustion yet, okay? So I'm still bullish, all right? I'll be bullish until they break something or they show me some type of exhaustion, all right? So SPY on the weekly, in an uptrend. On the monthly, again, see all of the green dots, okay? That's bullish, all right? See, that's bullish. See the pullback, all right? And when they make a higher low right here. Notice the higher low. What did the bulls do? They were inspired to run up and make a higher high, and they did. Okay, all the way up to 650. Okay, so that's what we're looking at right now. That's what happens when you make a higher low. Most times the bulls are inspired to make, most times, not all times, inspired to make a higher high. So this is the monthly chart. Again, you can see obviously the monthly is in an uptrend. Again, the price candles on top of the 3 or on it, laying right on it, and they're above the 8 EMA, okay, right there. And all 3 of them, the price candles, the 3, the 8, all over the 17 EMA, which happens to be rising. Okay, so that's bullish. Okay, higher low, higher high, uptrend. That's bullish. Okay, so there's SPY. Let's take a look at the game plan. All right, and pull up the game plan right here. And we'll scoot down to the 10. Okay, so SPY pivot. Again, I mapped that out for you this morning and shared it with you. 640, 660. So above it, I'm a bull. Below it, I'm a bear. Okay, currently we're above it. So I will be looking for a green 10-minute candle, okay, on the green side, okay? So we have we have green erases red over 649.25, okay? Okay, so see this high over here? Okay, so I want to get back over this high and that high, and that's going to be my green erases red entry. Okay, might work, might not work, but that's my green erases red entry. Price over 649.25. My red erases green entry would be, okay, see how price bounced all the way up to here. All right, so this is what the bulls created. They created a green box. Let's get the green. A green box of price action up to here. Now, if the bears come in and they erase everything that the bulls just created, okay, in other words, the bears come in and erase all of that and more, this will be my red erases green entry. That would take the bears would be coming all the way back down here to test the lows, and they may go further past it. So price below these lows, 643.65, that is my red erases green entry. In other words, bears erasing what the bulls just created. Okay, it's like the bulls just built this nice little sand castle, okay, or sand sculpture, okay, on the beach. And here come the bears, and they come trouncing through it and destroy it, okay? That's the same thing, okay? That's a picture in your mind, okay? So you can imagine that's what's going on, okay? So you see, that would be the bears erasing what the bulls had just built, all right? Which was a move from here up to here. So we'll see what happens, okay? So we'll see what happens today. Okay, so there's SPY. That's the game plan. All right. So we have a green erases red entry, a red erases green entry, a pivot. Okay, price over, I want to be bullish. Price under, I want to be bearish. Okay, now in addition to that, we've got right here, I like options. I use options because I can leverage my money with options. All right. I like 4-day till expiration options and 11-day till expiration Friday options. I especially like the Friday options because, okay, they have higher liquidity. In other words, they have higher open interest. Okay, higher open interest is going to equal higher liquidity. I like the Friday options on the multiple of 5, like 655, 660, 660, 645, you get the idea on the multiple of 5. I like them $2 to $15 out of the money. In other words, I like my strikes to be $2 to $15 out of the money. Okay, when I'm starting a small account, all right, they're a lot cheaper. When I'm buying in the money, it costs me a lot. So in other words, I'm willing to give up a little performance to take on a little less risk, okay? Remember, you're paying more for those in the money options, okay? All right? So in order to take on less risk, I'm picking some out of the money options, and I won't get the performance that I will from an in the money option, all right? If you want the very best performing option, most of the time it's going to be the 0 days till expiration, meaning it's going to expire tonight at 4:15, okay? And it's going to be in the money. In other words, if it was a call, all right, it would be a call that is below where price is currently at. So you can see price is currently at 648. So it would either be 647, 646, probably close to 645, 646, and below would be in the money, because these are kind of at the money, okay? So you would want it to be 645, 644, 643. Those would be in the money down there, okay? Out of the money is going to be your 650s, your 655s, your 660s, okay? So you understand what out of the money and in the money is. I like 10-minute uptrends over VWAP, where price is breaking up, and away from VWAP. I like 10-minute downtrends under VWAP, where price is breaking down, and away from VWAP, okay? So let's look at a few 10-minute uptrends, okay? So we'll go to the 10-minute chart, okay? You can see the 3 is underneath the 8. Okay, so there's a downtrend breaking away from, see this burnt orange line or this brown line right here? Price and the candles, everything are breaking away. In other words, they're not attached. The space is getting wider between the VWAP line and the price action, the height of the price action candles. See how it gets further and further and further away from VWAP right here, okay? So I like that. That's what I like, when it's breaking down, and away from VWAP, okay? I like it when price action, here's another 10-minute uptrend right here. That was a 10-minute downtrend. Here's a 10-minute uptrend. See, the candles are lying above or plotting above the 3 EMA. Okay, so I like it when the candles are plotting over the 3, and the 3 is plotting over the 8, which is the thin white line. That's the 8 EMA. Okay, and I like it when all of that is plotting above VWAP, which is the burnt brown line here. Okay, so when I see that, and notice how the space between the burnt brown line, that'd be VWAP, and the candles is starting to widen further and further and further until we gap all the way up here, and notice the distance, okay? Okay, so then got too far away and price got recalled. All right, but that's what I like. 10-minute uptrend over VWAP where price is breaking away higher and higher and higher, okay? Same here, lower and lower and lower, okay? Those are directional calls. These would be directional puts. Now, Friday, okay, I did not trade the 10-minute downtrend. I said I wouldn't trade it, and I said it before I even opened. I'm not interested in a counter trend trade in a bullish environment, okay? You gap up, that's bullish, all right? Just got a little too far, and we wound up filling gap. But I'm not willing to trade now, but I am now. If we break below this low, I would be willing to trade a red erases green event underneath that, okay? That's what I'd be willing to trade underneath that if that happens to manifest sometime today, okay? But I'm more interested in the 10-minute uptrends than I am in the downtrends because we're in a bullish environment. Think about it. You got the dailies in an uptrend, the weeklies in an uptrend, the monthlies in an uptrend, okay? The 2 hours in an uptrend, okay? So I'm more interested in the 10-minute uptrends. Not to say I won't trade these sometimes, okay? But there's certain times I won't trade them, all right? And the reason being is because I don't want to have my lunch stolen from me, all right? I don't want to, because what happens is you get like a big shot in the gut when you're in these for short, and they turn around after right at the end of the rubber band candle, price retraces all the way back up, okay? So that's why I'm not interested in the downtrends on Friday. Today I am, because I would have a red erases green event that happened right through here, okay? I'd be interested in that. I was not interested in it Friday, so I did not trade the downtrend. It was a beautiful downtrend, okay? But I wasn't interested in it. I was more interested in the bounce. So I bought the dip, in other words. That's what I did. I bought the dip. I was more interested in the dip, all right, than I was the downtrend, okay? So there's SPY, all right? Again, counter trend, okay, in this bullish environment is a recipe for disaster. Be careful with that, all right? You can lose your lunch over that, okay? So there's SPY game plan, okay? So let's go take a look at QQQ, because I got a QQQ game plan as well. Okay, so QQQ game plan, pivot 575.45, above it I'm a bull, below it I'm a bear. Red erases green, underneath 571.95. Green erases red, okay, up over that, see that peak right there, up over 577.95, okay? That's my green erases red entry. Again, I like the same options, all right? I like 4 days and 11 days till expiration, Friday options on the multiple of 5, $2 to $15 with strikes that are $2 to $15 out of the money. I like 10-minute uptrends over VWAP. I like 10-minute downtrends under VWAP. Okay. Now there's one thing you have to watch, and it's called chop. All right. Chop can wreck your account, because what happens with chop is it's a 10-minute trend that happens to abruptly reverse. All right, so you get into this 10-minute trend to stay in it, to go and to take your ride, and then it abruptly reverses. Okay, and then you decide, well, I'm going to trade it short because now it seems to be going down. Okay, and then it abruptly reverses again. Okay, in other words, price just keeps crisscrossing back and forth across VWAP 2 or 3 times. On instances like that, it's best to stand down. Okay, kind of wait, all right, and back off. Okay, what usually happens to a novice trader, okay, is when they get into the chop, okay, the next trade becomes larger. In other words, they put more capital up at risk to compensate for the loss that they just produced on the failed uptrend that happened earlier. Okay, and hence now that gets going, and now that gets chopped up. Okay, and then they get even bigger on the third trade. Okay, and hence that chop will chop up your account if you're not careful. So you have to recognize when you're in it. Okay, when you're in the chop and price is crisscrossing 2 or 3 times across VWAP before 11 o'clock or noon. Okay, kind of stand down on some of that. All right, unless you see big strong candles. All right, it's best to wait till the chop price action breaks out of the chop and then trade it from there. Okay, so we have to watch for chop this morning, where price crisscrosses back and forth across VWAP, because all that's going to do is chop up our account. So we have to be careful. Okay, and by the way, I'm starting a new 27K account today. All right, so the last 27K account, let me just share the results because I'm proud of them. Okay, so we started this on the last open house. That was August 4th. Okay, and we are up to, we left off on Friday with $860,000 on the 27K account that we started up with. Okay, now my daily goal, all right, is 1%. So my goal today is to make 270. Okay, I'm not against making more, all right, but that's my goal, to make 1% each day. If I happen to make extra, okay, I have a rule in my trading plan where I can use the extra as part of my risk, all right, on the following day. Okay, so I can, if I have some extra, I can use that, but I have to stay on my 1% schedule. Okay, so you can see how easy it is to climb when you've got all of this extra capital, okay, to use and to put at risk to help you double, triple, quadruple, 10x your account. Okay, again, you have to get the extra. I have to stay on schedule. Failing to stay on schedule, okay, I don't have any extra. Okay, so I'm just limited to my 1% or my 0.5%, whatever I decide is going to be whatever my risk unit's going to be. Keep in mind, okay, if your risk unit is 1%, then you've got 100 trades, right? 1%. Okay, well, actually, it will limit your trades. Okay, if you take your 27,000, all right, and break it up into 1%, it's going to be 100 trades, right? So now 0.5%, you're going to get twice as many. You're going to get 200 trades. All right. So again, you don't want to blow up your account. All right. So we want to limit the amount of risk that we're going to use. All right. But we want to maximize our profits that we win. All right, on the way. So this is my schedule that I made. You can see I got a lot of extra, and because I had a lot of extra, I'm able to capitalize with big wins. All right, because I'm allowed to use my extra and put it up at risk. All right, so there's QQQ. Let's take a look at IWM on the daily chart, of course. Okay, here's the April low. Okay, you can see that's a 5-month rally high in the middle of quadrant 4. Not an all-time high, but a rally high. This is the all-time high. Okay, a rally high on IWM in the middle of quadrant 4. That's bullish. Okay, and we keep making higher lows and higher highs, so we're in an uptrend. So that's bullish up there, quadrant 4. Anything over the upper third, in the upper third of the quadrant lines, is bullish. Lower third, that's bearish. In the middle, that's neutral. Okay, so here's IWM on the daily chart in the middle, up in the middle of quadrant 4. That's going to be bullish, and we're still in an uptrend. Obviously, if it's making new 5-month highs, it's going to be in an uptrend. Okay, let's take a look at Diamond Dow. Okay, Diamond Dow prints a new all-time high on Friday. Okay, nice trade there. Okay, so that's top of quadrant 4. That's bullish and in an uptrend. Okay, let's take a look at FNGU. Okay, FNGU prints new all-time high. Okay, that's bullish and in an uptrend. Okay, obviously you see the highs. Okay, made a higher high, so that's an uptrend. Okay, let's take a look at, I just did QQQ, right? QQQ. Okay, got a higher low. See the tail, higher high, closing over bullish trap. See the 3 on top of the 8. Over the 17 EMA. Okay, not a new all-time high. Okay, not even a new rally high. All right, just a higher low and a higher high, closing over a bullish trap over the 17 EMA. That's bullish, by the way. So there's QQQ. Let's take a look at our technicals. Now we're doing quite well, but the breadth is telling us something different. Okay, this is a very low breadth. All right, maybe the rally's coming to an end. We'll see what happens. But the breadth, all right, the market participation got lower and lower. Okay, so this is market participation down here. Okay, was lower, and I don't know if it was lower than this. It hasn't gotten lower than this yet. Okay, but we're losing market participation up there at these nosebleed heights of making new highs. Okay, right there. So there's T2101. Market breadth is decreasing. Okay, T2122. Okay, this is the 4-week new high-low ratio. Price action. Okay, I have it set up on a 15-minute chart. Price action winds up landing in the buy zone, and we wind up consolidating over prior consolidation. That's a bullish outlook. Okay, and we make an appearance at the end of the day in the overbought zone. Okay, that is a bullish outlook for today. Okay, the fact that we consolidated over prior consolidation, created a higher low, all right, and then made our appearance inside the overbought zone. We'll see what happens. Maybe we hang out in the overbought zone all day. We'll see. T2123, okay, new all-time high for T2123. Okay, that's the cumulative 4-week new high, new low right there. New rally high, new all-time high for T2123, 15-minute chart. Okay, notice the bulls created a bullish gap up. Notice the bears failed to fill the gap. Okay, that is a bullish environment. Whenever you see that happen, again, look at the day before. Bullish gap up, bears failed to fill the gap. Okay, bullish gap up, bears did fill that gap. Notice they came down, all right, and they filled the gap right there. Okay, so this is This is bullish. Again, we're holding the higher ground. Look at the consolidation. It almost moves in like a straight line right through here. See? Like straight line for the most part. Okay, see it? See how they're all like, it's like a string of stairs. Okay? Okay, and then we got this, not quite a line, more like a box. Okay, right up there. Okay? So there's T2123, 15-minute chart. That's bullish up there. Okay? Consolidating over prior consolidation, bullish environment. Okay? 3-bar chart. Okay? Notice there's the last high, new all-time high up over the 200 SMA. That's bullish. Top of quadrant 4. That's bullish and in an uptrend. FNGU. FNGU really hooked us up yesterday. Friday. Okay, again, bullish gap up. The bears did fill the gap. Notice price gaps up, bears filled the gap, and then they just consolidated over prior consolidation, but under VWAP. But it winds up being under VWAP because we gapped up so high up there. So if we box this off, okay, with smaller boxes, okay, you can see this would be the prior price action. And what is this? Consolidation over consolidation. That's bullish right there. Okay, and you're up on top of the 200 SMA. That's bullish. Let's take a look at our economic package. All right, so we'll pull that up next. Okay, we'll start off with the US dollar. Okay, now the dollar is in a downtrend. Okay, so you can see right here, price comes down and then moves over to the right. Okay, that is bearish. Okay, notice it's moving down. It's showing weakness. It's just like they got knocked out. Okay, they can't get up off the mat. Okay, that's weakness. Okay, they got knocked down and they can't get up. All right, so they're down and in a bear flag right now. Okay, now for the dollar, all right, a weak dollar, all right, for the consumer in us, that sucks. All right, because that makes all of our goods and services cost more. All right, because it's going to take more dollars to buy those. All right, that's for the consumer in us. But for the investor in us, okay, we love it because it makes our goods and services more affordable around the globe. Or in other words, it opens up new markets for our goods and services made here in the USA. All right, so what used to be unaffordable before, but because the dollar is much less now becomes affordable for our goods and services. So as we increase our goods and services, in other words, more revenue on the top line, most of the time that transcends down to the bottom line, which equals higher earnings. When you get higher earnings, you get a better price for your security, all right? The value of your security increases, okay? So for the investor in us, we love it. For the consumer in us, it sucks, okay? Because now everything's going to cost more, okay, with a weak dollar, okay? So it's a double-sided coin, okay? So investor, great. For the consumer, not so much. So we're in a downtrend right through here, okay? So there's the dollar. Let's take a look at economic calendar for today. Not much happening, all right? For tomorrow, not much happening. For Wednesday, PPI final demand, 8:30, okay, and a petroleum report at 10:30. Petroleum report at 10:30 is pretty normal, okay? The main event this week is CPI, that's at 8:30, all right? That's our inflation, okay? Consumer price index measures inflation. Okay, so that'll be the main event. So that's why I'm saying, like, you may want to be hedged going into Thursday because that will be a CPI data release, all right? All right, and that we're watching this so we can get some rate cuts, all right? If inflation is not curved or jobs get out of whack, okay, that's the Fed's job, is to keep people employed and keep inflation down, all right? It's not an easy job, all right? But He's been doing well so far. He got us these market highs. I'll say that. So even though we may throw the tomatoes at him, the rotten tomatoes, okay, sometimes, but for the most part, he did bring us to these highs. All right, so there's CPI. That's the main event this week, 8:30 on Thursday morning, right? Thursday the 11th, okay? Earnings report. Okay, let's move ahead 1 week. Okay, so looking here, just familiar names, but nothing market moving. Okay, again, Oracle's going to report $626 billion. Okay, they're going to report tomorrow night. Okay, they're not really a market mover, but they will definitely affect the tech sector. Okay, Wednesday, again, some more familiar names, Chewy, all right, but not market moving events. Okay, Adobe, $148 billion, okay, on Thursday evening, okay. Again, not a market moving event, but it definitely will help out the tech sector because I'm sure that's where they are. Okay, on Friday, again, more familiar names, nothing that's going to move the markets. Max Payne, 646 right here, and 1.3 calls for each put that happens today. Okay, so we'll see what happens, all right, for today. All right, I'm going to take a break. I'm going to try to get this video rendered, all right. Max loss today is 1%. Perfect. Love it, KJ. All right. All right, guys. All right, I'm going to take a little break, all right, and I'll be back, and we're going to open up the markets here in like 20 minutes, all right? All right, I'll see you soon, all right? I just got to get this rendered and posted for all the rooms and everybody out there on social media, so I'll be right back.